Welcome to TalkTickers. We're your shortcut to understanding what really matters from today's earnings calls.
Yep, cutting through the noise.
Today, we are diving into Fluor's first quarter 2025 results. We'll pull out the key numbers, the strategy talk, and what they're looking at going forward.
Right. The goal is to give you the essential info on their performance and outlook nice and clear.
So let's jump right in, the headline numbers.
Okay, so first quarter revenue came in at $4 billion.
$4 billion, okay.
But what really stands out, I think, are the new awards. They pulled in $5.8 billion this quarter.
Wow, that's quite a jump compared to revenue.
It is, and it was mainly driven by a couple of really significant wins in their urban solutions segment. That gives them a book-to-bill ratio for the quarter of 1.5.
1.5, that's pretty strong. Signals growth, right?
Exactly. They're booking work faster than they're burning through it. And interestingly, a huge chunk of that new work, 87%, is reimbursable.
Okay, reimbursable.
Yeah.
So less fixed price risk, generally speaking.
That's usually the implication, yeah. It suggests costs get passed through to the client more directly. And this focus carries through to the overall backlog, too.
Which is now?
Total backlog stands at $28.7 billion, also pretty healthy. And 79% of that is reimbursable.
Got it. So a consistent theme there. What about profit?
Consolidated segment profit for Q1 hit $131 million.
Okay.
And adjusted EBITDA showed a really nice increase, $155 million for the quarter. If you compare that to last year, same period, it was $88 million.
Big jump. And earnings per share.
Adjusted EPS landed at $0.73. That's up from $0.47 in Q1 of 24.
Okay, so financially, looks like a solid start to their fiscal year. Revenue steady, but awards, backlog, and profitability all seem to be pointing upwards.
Yeah, the underlying metrics look pretty positive.
Now, beyond those numbers, what are they saying strategically? Any big shifts happening?
Yeah, this is actually quite interesting. They're framing it as a transition. They talked about moving from Chapter 1, which was their fix and build strategy.
I remember that phase.
Right. Now they're entering Chapter 2, which they're calling grow and execute. This covers the period from 2025 through 2028.
Grow and execute. So the focus is shifting.
Definitely. The emphasis now is much more on generating cash and earnings. They stressed reinforced financial discipline, continuing to push for fair contract terms, solid risk management, and just strong commercial sense on projects.
Makes sense after a fixing phase. Where are they targeting this growth?
It's targeted growth within their existing three segments, urban, energy, and mission solutions. They're looking at specific markets within those segments. They also mentioned considering bolt-on acquisitions.
Bolt-ons, so smaller targeted deals.
Yeah, exactly. Things that add specific technical capabilities, not massive transformations. But they did reiterate that, at the end of the day, project delivery is still core to how they create value.
Okay. Let's dig into those segments then. Urban Solutions seem to be the star this quarter with those big awards.
It really was. It's their largest and most diverse segment. It reported a profit of $70 million in Q1.
And that's up because?
Primarily increased execution activity. Those recent large awards, especially in life sciences and metals, are really starting to ramp up.
Right.
New awards in urban were $5.3 billion, which, as we said, drove the overall number. That compares to $4.9 billion last year. And the ending backlog for urban is huge, $20.2 billion. That's 70% of the company's total backlog.
Wow. So heavily weighted towards urban right now. And within that, I think you mentioned ATLS, their life sciences bit.
Absolutely. ATLS had another strong quarter. They landed a really significant new award from a major pharma company. It's for EPCM services on a multi-billion-dollar investment.
EPCM engineering, procurement, construction manager.
Correct. And they made sure to highlight their history here, 1,500 projects over 50 years in life sciences. They also noted progress on existing stuff like doubling capacity at a biotech facility in Denmark. Apparently, it'll be the largest of its kind.
Impressive scale.
Right.
What else are they seeing in ATLS?
Future opportunities seem plentiful. Pharma, obviously, but also advanced manufacturing. Semiconductors, they mentioned tracking a specific clean room opportunity there, and data centers, too. Lots of growth areas.
Definitely seems like they're positioned in some hot markets. What about mining and metals, also under urban?
They picked up a services award for the Recotic Copper Gold project in Pakistan. Now, that's interesting because those initial service contracts can sometimes lead to bigger EP and CM roles down the line.
A foot in the door, potentially.
Kind of, yeah. They also mentioned growing interest in green steel production potential work with an existing aluminum client there, and just generally more focus on boosting copper production in North and South America.
Okay. Shifting gears to infrastructure. What's happening there?
Infrastructure saw $682 million in new awards, notably for a highway widening project down in Texas.
Always roadwork in Texas.
Seems like it. And the big one, the Gordie Howe Bridge project, is getting really close, 96% complete. They expect to hand over the U.S. port of entry in July, targeting overall completion in the fall.
Good progress there. All right, let's talk energy solutions. The profit was down a bit here, you said?
Yeah, segment profit was $47 million, down from $68 million last year.
What drove that decrease?
A couple of things. Some projects are just naturally winding down, nearing completion, but they also took a reserve related to an old joint venture project in Mexico, one completed quite a while ago.
Ah, okay. Any offsets?
Partially, yeah. They had increased profit recognition on a chemicals project because the client actually asked for a scope change, expanding the work.
I see. New awards in energy.
Came in at $315 million. That included some additional pre-feed services for that big Aramco petrochemical facility in Saudi Arabia.
Right. And there was some news on the DAO project.
Yes, the DAO Path2Zero project. DAO decided to slow down the actual construction phase.
Why is that?
They cited market conditions and financial considerations. But, and this is key, they told Fluor to keep going with the engineering and procurement work.
So not canceled, just paused on the build-out.
Seems so. DAO apparently reaffirmed their commitment. Fluor's job is to keep the E&P going so they're ready when equipment arrives. Elsewhere, the LG Canada project is in the final stages. Most systems are mechanically complete. Commissioning is underway.
Okay. Future prospects in energy.
They mentioned a potential chemical recycling plant and a gas compression project as things they're looking at.
Got it. Last segment, mission solutions. Profit was significantly lower here.
Yeah, quite a drop. Segment profit was only $5 million compared to $22 million a year ago.
Ouch. What happened?
The main hit was a $28 million reserve they had to take. It relates to a recent ruling on a really long-standing claim tied to a support services contract from back in 2019.
Okay, so a legacy issue hitting the P&L.
Pretty much. And on top of that, they lost the recompete for the strategic Petroleum Reserve project. They'd managed that for 11 years.
That's a blow.
It is. There might be a transition in the second half of the year. They have filed a protest, so we'll see. But yeah, not great news there.
Any new work coming in for mission?
They did get about $164 million in new awards bookings with the DOE, FEMA, the Army, and the backlog is $2.4 billion. Future stuff includes the potential full release of the Savannah River plutonium pit facility and other national security work.
Okay, so across the board, it sounds like client behavior is a bit mixed, depending on the project or sector.
That's a good summary. Clients who have really clear time-to-market drivers, like maybe in life sciences, seem to be pushing ahead.
Makes sense. Get the drug factory built.
Right. But other clients, perhaps more sensitive to cost or overall GDP growth, are being a bit more cautious. They want more market clarity before final investment decisions, FIDs.
But they're still doing some work.
Yeah, that's the interesting part. Many are still moving forward with engineering and design work, so Fluor's still engaged, and they mentioned working actively with these clients on procurement to try and manage costs.
Okay, let's pivot to some more of the broader financial details. G&A expenses were down.
Significantly, yeah. Down to $36 million from $59 million year over year. They said this was mostly due to adjustments in stock price-sensitive compensation.
Ah, okay. So linked to the share price movement. What about interest?
Net interest income was $17 million. That's actually down from prior periods. They attributed it to lower cash balances because they used some advance payments to cover subcontractor obligations.
Got it. Cash position.
Ended Q1 with $2.5 billion in cash and marketable securities. That is down from the end of the year, but they flagged share repurchases, higher working capital needs, and just typical first quarter cash flows as the reasons.
And operating cash flow itself.
It was actually an outflow of $286 million for the quarter, again, mainly driven by that growth in working capital as projects ramp up.
Okay. You mentioned some one-off items earlier. There was a settlement benefit.
Yes, an $84 million positive benefit recognized. This was from settling a jury verdict against an old infra project completed like over 12 years ago.
Okay, good news cleaning up the past. But there was a negative item too.
Yeah, on the equity method results line. A big negative impact, $477 million. This was purely a mark-to-market hit on their investment in NuScale because NuScale's stock price dropped during the quarter.
Right. Important to remember, those are non-cash accounting adjustments, usually excluded from their adjusted figures.
Exactly. It doesn't reflect Fluor's operating performance directly.
What a bit, yeah. Spent $142 million repurchasing 3.6 million shares just in Q1, and they actually upped their expectation for the full year now, anticipating up to $600 million in buybacks.
$600 million. Okay. And the guidance for the rest of 2025. Any changes?
Nope. Holding steady. Adjusted EBITDA guidance remains $575 to $675 million. Adjusted EPS guidance is still $2.04 to $2.75.
Okay.
They still expect operating cash flow between $450 and $500 million for the year, revenue growth around 15%, and that book-to-bill over 1.
Segment margins holding too.
Yep. Urban around 4-5%, energy 3.5-4.5%, emission 5-6%, all consistent with prior guidance.
Any other financial nuggets? Tax rate, oddities? Tax rate in Q1 was lowish, around 20%, but they expect it to climb closer to 30% for the full year. They did point out something interesting. 2 projects had scope reductions, which actually accelerated some profit recognition.
How much?
They estimated it added about 0.09 cents to EPS across both urban and energy segments. So maybe $20 million each in EBITDA terms, roughly. A bit of a timing benefit there.
Okay. And that legal settlement benefit, is that cash in the door?
Not quite all of it. While they booked the $84 million benefit, they still expect to have to pay out about $30 million in cash related to that settlement over the rest of 2025.
Ah, okay. Net positive, but still an outflow to come. And finally, any lingering concerns about Mexico, given that reserve they took?
They addressed that, said they feel comfortable with their position there. They have 4 major projects ongoing, most in late stages. That reserve was on a project completed years ago, and they don't seem to expect further surprises from that specific issue.
Okay, that covers a lot of ground. Feels like a complex quarter with moving parts, but the underlying growth signals in urban seem strong.
Yeah, that's the main takeaway, I think. Strong awards driving the backlog, especially in those future-facing sectors.
All right, let's move to our favorite speculative segment. This is not financial advice. But based on all this, got any outrageous but plausible trade ideas?
Okay, thinking hats on. Given that strength we just talked about in urban solutions life sciences, advanced manufacturing booming, and their hint about bolt-on acquisitions for tech capability, here's one idea.
Lay it on us.
Maybe, just maybe, consider a long position in Fluor paired against a short position in a much broader construction and engineering ETF, one that's less focused on these specific high-growth niches.
The rationale being Fluor might outperform the general sector because of its specific focus.
Exactly. It's highly speculative, of course, but the idea is Fluor's targeted strategy and wins in hot areas could give it an edge over a more diversified, perhaps more cyclically exposed index.
Interesting angle. Got another one for us, maybe playing on the energy segment news.
Okay, how about this? You look at that DAO project slowdown in construction, but crucially, the continuation of engineering and procurement work by Fluor. Combine that with Fluor's overall confidence in converting their backlog.
Right.
Maybe a Paris trade. Long Fluor, short a supplier that's like super heavily reliant on the actual construction phase of big petrochemical projects.
So hedge against broader construction slowdowns in that specific area, while betting Fluor still earns from the E&P phases and its overall diverse backlog.
Precisely. Again, totally outrageous, potentially plausible.
Yeah.
It tries to capitalize on Fluor's continued engineering involvement, even if the big physical build is delayed, while hedging against suppliers who only really benefit when the dirt is moving and steel is going up on those specific types of projects.
Definitely food for thought there.
Oh, yeah.
Okay, that brings us to the end of this deep dive into Fluor's Q1 2025 earnings call.
We've hit the financials, the strategy, the segment performance.
And even brainstormed some highly speculative trade concepts. Remember, everyone, this is purely for informational discussion. It is absolutely not financial advice.
Please do your own research thoroughly before making any decisions.
We hope this gave you a clearer, faster understanding of Fluor's recent performance and where they might be headed. What are your thoughts? Did that urban solutions strength stand out to you too? Or are you watching something else?
Yeah, let us know. Which other calls are on your radar? Join the conversation.